Good morning. Houston CRE is not one market, and here's where money is actually moving. Out of state investors often make the same costly mistake when underwriting Houston commercial real estate, and they can treat it like a single market instead of many submarkets, is the bigger point. But Houston is not one market, it's a collection of micro markets. And each is driven by different demographics, infrastructure timelines, zoning realities, and capital flows. And understanding where money is actually moving and why is the difference between chasing the headlines and also building your durable returns. So, below is how serious investors, developers, and 1031 buyers are dissecting Houston today. The myth of Houston is one CRE asset class. Now, Houston spans over 600 square miles, with submarkets behaving independently. And office distress downtown tells you nothing about industrial pricing along I 10 West, as well as retail softness inside of Loop 610, also has little correlation with service driven retail that's exploding along FM 1463. Now, capital is not leaving Houston, it's just rotating within it, is the bigger point. And let's take a look at some micro market breakdowns where capital is concentrating. So think Katy, Texas, retail, medical, and owner user demand are the big drivers. And Katy continues to attract capital for one simple reason: rooftops plus income. And the drivers here are the Katy ISD's population growth, medical expansion, so clinics, outpatients, and medical office buildings in the area. But also there's strong owner user demand for retail and flex opportunities. And SBA 504 and conventional financing are providing liquidity in the markets. So capital's got a preference for strip retail and medical office buildings, as well as small industrial and flex office parks. And the investor takeaway is that Katy favors cash flow durability over speculation. Let's look at Fulshear, Texas. It's the path of growth, and speculation is turning real. So Fulshear has shifted from land speculation to the execution phase of their growth. And some of the drivers are the Grand Parkway's close accessibility, as well as the Texas Heritage Parkway that's building out. But there's many master plan communities as well. And there's the old saying that retail is going to follow rooftops. And there's also build to rent or BTR demand in those areas. And the capital preference are for pad sites, for neighborhood retail, and for BTR adjacent commercial. The investor takeaway here is this is early cycle positioning and not late cycle yield chasing. So let's take a look at another submarket in Brookshire, Texas, where industrial and iOS capital is quietly accumulating. And Brookshire is where institutional capital moves before headlines appear. And the drivers are Waller County's logistics zoning is definitely something that appeals to folks. There's also proximity to I 10 and Grand Parkway. But as well, there's iOS and light industrial demand. And there's a lower land basis than Harris County. So the capital preference is for industrial outdoor storage facilities or iOS facilities, but also for distribution facilities. And there's a good opportunity for land banking if you're going to be thinking about building logistics or industrial down the road. So the investor takeaway is that Brookshire is going to reward its patient with capital who scale with their visions. Let's look at I-10 West corridor, so the spine of West Houston's growth. And I-10 West is really the connective tissues linking Katy, Brookshire, and Houston's industrial core. And some of the drivers there are there's going to be port to warehouse logistics from point A to point B. There's manufacturing spillover. And also there's energy and tech employment base. And the capital preference along that little corridor is for flex industrial and service-oriented retail, as well as smaller shallow bay distribution sites. So the investor takeaway is that I-10 West is the infrastructure that's anchored the growth and not the clinical hype. And there's also Grand Parkway, Houston's new outer loop. So the Grand Parkway is redefining Houston's growth map. And the drivers are suburban densification and that retail always follows traffic counts. as well as rooftops. That's the other one there. But medical and school driven or daytime population are helpful along the corridor. There's going to be long term land appreciation, and there's capital preference for long hold retail sites, for mixed use nodes, for the ecosystems that surround BTR communities. In the investor takeaway, this is where 2030 Houston is being built today. So, what does this mean for somebody who's a 1031 buyer? And 1031 investors are no longer chasing trophy assets. They are looking at reducing their management risk. They're looking at prioritizing tenant durability. And they're targeting markets with lender confidence. So, West Houston's micro markets check a lot of these boxes. So, please think about it. And the final thought here is that capital's local and it's not citywide. And the best Houston deals rarely look Houston obvious. And here are some of those ideas, but it could be submarket specific and infrastructure aligned and demographically inevitable. Now, if you're underwriting Houston properties as a single market, you're already behind the curve, is really what the point I'm trying to make here. But help me help you. Please visit my website, HoustonRealEstateBrokerage.com. We can have a conversation about whatever you like. I'm glad to help. Look forward to hearing from you. Have a good day.